Okay, good morning, everyone. How are you doing? Good conference, everybody's awake. I don't know how many of you were at the gala last night. Probably the ones who aren't here were at the gala, right? Anyway, it's very nice to be here. It's great to talk about Web3 at a cybersecurity conference. I'm the founder and CEO of Blockchain North. We're the first media company in Canada dedicated to the blockchain or Web3, or dare I say, crypto space. So it's an honor for me to be moderating a panel today with Jesse, Niraj, and Louis. See their full names there and their short bio, a very quick introduction. So on the end there, Louis Sirico is the CTO and co-founder of Fluidify, which is an award-winning decentralized finance platform. He's also an AI patent inventor and a cloud architect with experience in government bodies in the United States, actually, like the FBI and the DOD. So that is Louis. Then we've got Jesse next to me, who's the Bitcoin expert, former banker. A lot of people in the Web3 space, by the way, are from TradFi originally. He's also the author of Magic Internet Money. What a name. A book about Bitcoin. So maybe he'll tell us a bit about that too. And in the middle is Niraj Mather, who's the Chief Information Officer. Okay, CIO could be a few things at Sick Kids Foundation, and also the co-founder of Myrtle Next Gen. So thanks again, everyone, for being here. Louis, I'm going to start with you. You have a lot of experience with transparency, with blockchain data, and how that can enhance security. We're going to talk a lot about security today. Could you elaborate how decentralized systems, excuse me, might be more secure than centralized ones?
Absolutely. Check, check. Everybody hear me? All good? Awesome. So one of the things that is inherently amazing about decentralized blockchains, right? I love to have the example of how many times the country of China made Bitcoin illegal. It's illegal. You cannot have it. 8 times is how many times I'm aware of that they said, you cannot have Bitcoin, it's illegal. Is Bitcoin still here? Yes, it's obviously still here. It didn't go anywhere. So, and that is inherent to the nature of a decentralized blockchain that can exist across geographies, across countries, anywhere in the world. And the power is, I can set up a node. Flo can set up a node. You can set up a node on a Bitcoin network or other blockchains. And this is part of the power of decentralization. Now, not all blockchains are the same, but that is one of the advantages to the security mechanisms within a blockchain.
Would any of you like to react to this specifically? I can share my microphone if you want.
No, I think
he nailed it. Okay, well, that's perfect. Louis, just staying with you just for a second, could you speak a little bit about transparency and how you think that could help mitigate some of the risks that we've seen, like centralized exchanges like FTX collapsing or others?
Absolutely. Speaking of FTX, another thing most people are not aware of is there was, of course, a very large centralized component of FTX, their centralized exchange, but there is also a decentralized component of FTX. And what most people don't realize is that 100% of the funds in the decentralized controlled aspects of FTX were recovered almost immediately. We're talking within days, without court intervention, without all these police enforcement. They were recovered almost immediately because a well-architected decentralized finance application, and a key is well-architected, allows you to recover your code because technically you have custody of your tokens, right? That's one of the other things that makes a decentralized application very powerful, is that transparency. So in a well-architected blockchain decentralized application, I can query a blockchain node that I set up. I set up my own node, and because I'm accessing my own node, nobody knows the questions that I'm querying my node. So now I have a layer of privacy that I wouldn't get if I'm querying somebody else's API, right? I'm querying my node, nobody knows what I'm asking, and I can get information about the application, such as pricing information, number of transactions, volume. I can also look at the contracts inherent to the application. I can scan them for vulnerabilities to ensure that they're secure. I can look to determine if they're a proxy contract or if they're an immutable contract. So there's all these things that I can do with a blockchain decentralized system that in a centralized application, you just got to trust that they're legitimate, and there's nothing you can do about it. And from an auditing perspective, again, you need a third party to go in, access their systems, and determine whether or not they're legitimate or not legitimate. And with blockchain, you query it yourself. You've got a node. You get the information right there.
So some of you may know, others perhaps not, that within the Web3 space, there are really two worlds. I would say there is Bitcoin and there is everything else. And the proponents of Bitcoin, which I believe Jesse next to me is, and this time I think you are going to have something to say, believe very strongly in Bitcoin's unique properties, decentralization being fundamentally one of the main ones. So what would be your rebuttal in terms of the challenges that Web3 might be facing that Bitcoin might not?
Yeah, I think thematically, Lewis is correct on most of what he's been saying. My issue when it comes to Web3 writ large is that most blockchains, not including Bitcoin, they tend to make trade-offs that weaken it. There is, if you want something to be decentralized, it has to be secure, it has to function in the open market, it has to be open source. As soon as you privatize a blockchain, it basically becomes a shared database. It loses some of the properties that makes it censorship resistant, that makes the data immutable, that makes it permissionless to access. And those are the key components of what people think makes blockchain so special. But the reality is, you need to have all those components plus the correct incentive mechanism to keep the security active and going, to keep the data immutable, to keep it all functioning so that all the users have their incentives aligned. And that's a very, very, very difficult balance to strike. In my mind, obviously, I think Bitcoin is the only thing that strikes that balance correctly. If you were to name any blockchain, and that includes the so-called decentralized public ones like Ethereum or Solana, I could unfortunately point to a few very glaring and obvious flaws that undermine its credibility and that do not make it what it is perceived to be. I think a lot of it is decentralization theater. It's decentralization in name only, not actually in practice. And so that's sort of where that's how I view where Web3 falls short on a lot of its promises.
Could I just ask, is there a world where there is room for both the completely decentralized systems like Bitcoin, perhaps being the unique one right now, and platforms that do make trade-offs but perhaps still offer value? Because you mentioned Solana, Ethereum are used globally right now, and people are building on them very, very actively. There's a lot of development happening. So clearly some people see value into it.
I agree conceptually with the goals of Web3 and the idea of decentralizing power structures and getting rid of single points of failure. It makes systems more robust. However, I do not believe that everything needs a blockchain. In reality, a blockchain is a ledger. It's a database. It's a ledger. It tracks transactions going back and forth. The ability to connect the data on a blockchain to something real and tangible typically involves some kind of central registrar or central party, and that's where things always fall apart for me, or one of the areas, at least, where things fall apart for me. So I very much think that decentralization beyond Bitcoin as a theme, as a governance theme, is very much possible. But I don't think everything needs a blockchain. In fact, I think there are very limited use cases for a blockchain because a blockchain is meant to be slow and expensive in order to maintain that security and decentralization. So that's, I'm actually going to be presenting in about an hour on this stage. I'm going to run through some examples where I see that decentralization happening, but I'm going to use examples that have no need for a blockchain.
Can you give us one now?
Sure. There's a protocol for, you could think of it as decentralized social media, called Nostr. Nostr stands for Notes and Other Stuff Transmitted by Relays. It is literally a meshed web of people relaying information to one another. Anyone can become a relay, the same way anyone can run a node, as Lewis pointed out. And so anyone can relay data. Anyone can join the network. There's nothing stopping you. There is no, the same way, Elon Musk could perhaps censor you at Twitter, or Mark Zuckerberg could censor you at Facebook. With Nostr, there is no CEO, there's no administrators, there's no marketing team, there's no administrative staff, none of that. It's just people voluntarily opting into a network because they see the benefits of it.
Wow, I'm going to turn to Neeraj now. You've worked from a very technical perspective on blockchains, and you've also mentioned that the complexity of Web3 can lead to specific risks. So I'd love to hear what you think those risks are, and what are some of the usability challenges that we need to overcome.
Yeah, I mean, I think from a, a lot of the vectors of vulnerability in Web3 are actually coming from the usability challenges and the complexity of the very building blocks that it's built on. So,
The building blocks, I like that.
yeah, so I mean, if you're looking at wallets and self-custody and interacting with smart contracts, the immutability of transactions, which also means the inability to reverse those transactions. And that inherently, for folks who are in Web3, who are technical, that's great because they have the desire to learn. But for the average person, it is challenging. For them to even grasp the idea of a wallet and the idea of secret, my seed and my secret key and keeping custody of it, those become challenging things where, and again, there's a technical piece of it, and then there's the human piece of it, where people will most likely, a malicious actor may fool you into clicking a wrong link or giving away your secret key and those type of things, which, to me, those are some of the fundamental issues that are, that are creating some of those vulnerabilities. And inherently with blockchains, you end up with digital assets, the digital assets that have a monetary value, which then attracts bad actors, right?
Is that any different, though, than the way perhaps my father was struggling with his computer up until 10 or 15 years ago,
Yeah.
and today uses it pretty fluently? Do you see the same kind of path forward, where today maybe people think it's complex, but in 10 or 20 years, everyone will have a wallet, the same way we save our flight tickets, on our Apple app? Or
Yeah, and I think this is where, from a UX usability perspective, Web3 is making strides towards Web2 and how we typically do things. But again, Jesse will say it compromises a lot of things, right? I have a ledger where I store, my Bitcoin, but, I can also, if I want, I can have Ledger store that seed phrase in the cloud, that's a vulnerability, or I can keep it in a safe. So there has to be a good middle ground there where usability and for an average person to be able to interact with blockchains or even, hold custody of their assets does not have to be this very complicated technical thing. And part of the challenge is also support, right? Who do you go to for support? A lot of these chains will have a Telegram channel. You don't know who's on it, who's telling you to do what. But that's where people end up turning to for help.
I'm curious, by a show of hands in the room, how many of you have a digital asset wallet? Okay, about half. We are at a cybersecurity conference, so I'm not completely surprised. But anyway, to the other half, maybe look into it. It might become something. Louis, I'm curious about standards in a Web3 increasingly decentralized world. If we believe this is which way we're going, what kind of standards will apply to this world and for both B2B, B2C users to basically navigate this space?
Great question. There are a lot of standards, and I won't bore everybody with acronyms, but the standards are continuing to evolve, and some of them are around usability, as you were pointing out. One of the things from a cybersecurity perspective that we utilize a lot, there's a standard called the Smart Contract Weakness Code, which is a standard for measuring a type of vulnerability within a smart contract, which is code that exists on a block that's executed to perform a function. And so one of the things that we have within our platform is we scan every smart contract that is minted or created on a blockchain for a weakness. We scan for about 20 different types of weaknesses, things that are called, rug pulls, self-destructing contracts, honeypots, things like this. But there is this whole smart contract weakness code standard, and we map vulnerabilities to those smart contract code weaknesses so that if you're an institutional investor or if you're a sophisticated investor that is looking at risk tolerance within your portfolio, you can determine whether or not a token is within or outside the scope of your risk tolerance by looking at how it maps to the smart contract weakness standard. So there's a lot, I could spend a lot of time on what they are, but mainly they're around communicating in a level playing field and interoperability between blockchains and applications within the blockchain.
I want to shift gears for a second and talk about real-world assets, which is one of the hottest trends in Web3 right now. Essentially, the tokenization of physical assets. Could be real estate, could be even things like stocks, potentially. I guess that's not a physical asset, but it's pretty real for people who are invested. Jesse, so you wrote a book in which you actually challenge the notion of tokenization or tokenizing real-world assets, yet experts within the Web3 space say that this could be a $16 to $20 trillion market within 6 years from now, 2030. Could you give us your thesis here?
So I suppose my thesis could be described as a little bit nuanced here. I certainly see the ability for real-world assets to be listed as tokens, but just because they're listed as tokens, that doesn't mean they will be operating, again, on a properly decentralized system.
So not Bitcoin?
In not so many words, yes. So I'll give you an example. Let's say you want to have a token for real estate, right? You want to fractionally own a piece of real estate, home, commercial building, whatever, it doesn't matter. We already have REITs, real estate investment trusts. You can buy fractional pieces of real estate. They trade on public markets. Your share is effectively your token. Where, in my mind, where does the need for a decentralized blockchain come in? And if you're going to try to introduce a decentralized blockchain to own that token, then how? And I want to get into the nitty-gritty of really how do you connect that real-world asset to the blockchain, because typically there has to be some registrar that exists in the real world that centrally says, okay, Jesse owns real estate number 1 and Louis owns real estate number 2, and he's going to sell 50% of his shares in that piece of real estate to this market, and it has to be centrally managed. So it can't, how can I enforce that without the need for that central registrar? And so again, that's where I talk about, we decentralize things in name, not so much in practice. And so that's where my thesis goes. Yes, we can tokenize real-world assets, but does that mean it's truly part of Web3 or truly decentralized? I think if you look under the hood and break it down, you will be able to very quickly find flaws in a lot of these projects.
This is where I'd love to initiate a little bit of a debate, and it doesn't have to become a 3 against 1, by the way. I'll help you out if ever they start, if you guys are beating each other on the ground here. But would either of you like to rebut what Jesse just said?
I won't rebut, but I will add flavor. So coincidentally, you probably didn't know this unless you looked at my LinkedIn profile. I ran a REIT in California about 10 years ago. And one of the things, if I were to have tokenized the real estate investment trust, I remember specifically lady who's still a personal friend of mine coming in, who was an investor in our REIT. She had just been diagnosed with cancer. And unfortunately, she was going to have to go through some extremely expensive treatment. And she's sitting on the other side of my desk, and she's in tears, and she asked me if I could give her investment back. Of course I did. It took me some time and effort to do it, but absolutely, who wouldn't, right? But if we had a tokenized REIT, theoretically, and I was running a much larger REIT and I didn't have the ability that I had, if it was tokenized, theoretically, there could be created a secondary market whereby she could sell the token or the issuance of her stake in our REIT to a secondary market. And there would be smart contracts in place where it could just happen. And that's where a lot of the largest financial institutions in the world are focused, like BlackRock. Okay, so I've been to the BlackRock office in Abu Dhabi. Why has BlackRock moved so much of their digital functionality into Abu Dhabi? Because they're in the same complex as in Abu Dhabi Global Markets as the regulators. And so BlackRock is pouring hundreds of billions of dollars per month into new financial products.
ETFs, right?
Well, ETFs is just one of them. Okay. But all kinds of new financial products that exist in digital form, because it is faster for them to go to market and faster for them to walk over to the regulators, say, this is what we want to do, and the regulators work with them and approve it, and have that issued on a blockchain that's global, than it is for them to create a traditional finance product and work with representatives in different countries, in different regions, and say, we need this to be approved. That can take millions and millions of dollars and years to develop, whereas now on a blockchain, they can go to market in a couple of months. Now think about that. That's why that number that you're mentioning, the 16 trillion, that 16 trillion is actually the low end. If you look at the source, World Economic Forum is where that source is. 16 to 68 trillion in illiquid assets. You mentioned real estate. My buddy Michael spoke on the stage yesterday. He runs a tokenized real estate. $238 trillion in real estate in North America alone. These are enormous numbers. But again, you have these older systems, these antiquated systems that were developed back in the 50s and 60s for trading stocks, and you have all these policies and procedures that were developed then, fine then. Now, companies are saying, how can I do this more efficiently? How can I do it more effectively? Digitization is replacing traditional finance the same way digital music replaced your cassette tapes and your vinyl albums. Well, maybe not your vinyl, but at least your cassette tapes.
Just pushing back a little bit, in the theme of, again, decentralization, the question I would ask is the blockchain that you're describing open source? Can I run a node that BlackRock is checking, that the regulators are checking, and then you mentioned that, okay, it's faster to go to compliance. Well, if it's decentralized, there is no compliance team. It just runs in the wild. So that's for me where, okay, I completely understand the idea of digitizing assets, real world assets, so that they can be traded online. But again, it breaks down from the decentralization part, in my view. So I guess, is it really decentralized?
I absolutely agree with you, and I said it earlier, I will say it again. Not all blockchains are created equal. I could speak for an hour on differences in different blockchains and how they behave and things like that. But again, I caveat with a well-architected decentralized system. But the reason that BlackRock went to ADGM is because there are regulators, and it is regulated, and it is governed by a sovereign entity within the UAE. The Abu Dhabi is the capital of the UAE. And so they're very forward thinking, but they're not the only region in the world. I mean, yes, Dubai right down the road, but you have, Hong Kong. The Hong Kong Monetary Authority is, in my opinion, one of the most advanced, at least in digitizing green bonds, right? In having environmentally sound products that exist on chain. Then you have other island nations and Zug in Switzerland, etc., Liechtenstein. There's lots of countries that are very, very forward in thinking and how digitization can enhance and enrich these new financial products.
Niraj, I'm going to turn to you, and I'm going to ask you to perhaps offer advice to anyone who's sitting in the room right now. And we know that half of the room here is not doesn't have a wallet. So how should people and also businesses approach, the Web3 space in a secure and in a way that benefits them, as quickly as possible, I guess?
Yeah, I would categorize the approach, or almost segment the approach based on who you are and what you want to do, right? If you're a tech founder, if you're a developer, you're a builder, you're spoiled for choice in this space. There are so many public blockchains. All the source code is open source on GitHub and other places. So, definitely, and there are test nets where you can actually try out things without actually expending real dollars, right? If you are an enthusiast, an early investor, somebody who wants to dip your toes, you may have to end up going to a centralized exchange in the beginning to get started. But then definitely, I would say explore the rest of Web3, which runs on self-custody wallets as well. And then for institutional investors, because you are, you have fiduciary responsibility for the dollars that you're managing, I think then it becomes more a question of talking to professionals who can manage that money for you, who've done it before. That's why I started Myrtle Next Gen with some of my friends in TradFi to really help investors, institutional and accredited ones who want to invest in this space, but again, you don't have the time to go do the technical learning because the learning curve is sometimes quite steep.
Thank you. And since we are at a cybersecurity conference, we often talk about the risk posed to blockchains themselves, especially the more centralized ones, I suppose, where there's a head you can cut, figuratively speaking. Is there an application of blockchain for cybersecurity? Can blockchain be leveraged to enhance security and as a defense mechanism, I suppose? Any of you want to answer that? Louis is nodding already, so.
So yes, again, if you look at a well-architected, immutable blockchain application, some of the things that you could provide are, say, security information. When was the last security audit performed? Who was it performed by? Or what body, what version was used to perform what processes? When I think about green bonds, right, one of the transparencies in a green project is sensor data, IoT data, that's taken directly from the area or where the project is built, that measures carbon emissions, right? And you have that data actually placed on the blockchain in an immutable format so that if somebody wants to audit that data, they can see it. Same thing with security as well. You're getting data in near real time, and you can see that that something actually has been done. And again, it's a ledger. It should be immutable, unlike some blockchains that aren't, right? But it should be immutable, and it should be open, or certain information should be open to anyone who wants to participate.
I was just going to ask, does anyone have any questions? Someone's already standing by the mic.
Thank you. Sorry if my English is not very good, but I will try to ask a question. For example, can you explain quickly if I run a SME, I don't know, I sell food or marketing, consulting, I don't know, how I can use the blockchain and what's the benefits for me and my company?
My very quick answer, and then I'll let my colleagues here give their answers, is accept Bitcoin as a medium of payment. You're a business, you earn money, Bitcoin is a form of money. If you want to accept Bitcoin, you can. You just opt into it. It's completely voluntary. In Canada, I didn't have a choice about using the Canadian dollar. There's legal tender laws that say you must use the Canadian dollar. But Bitcoin isn't like that. It's voluntary. So you can choose to opt in. You can use it. It can become part of your corporate treasury. It could become part of your savings plan. So that would be my interpretation. But perhaps these gentlemen, Neeraj and Louis, have some other options for you.
Yeah, I mean, again, blockchains are good for some things, but not for everything. I think, again, we probably need to get into more specifics of exactly, what the business model is. And wherever you have the need for immutable transactions, wherever you have a need for trustless systems, I think that's where blockchains have an applicability. So I think it's a little bit more nuanced. To dig into the specifics of where would you use it, you don't use it for the sake of using it. Of course, as a payment mechanism, like Jesse mentioned, certainly, digital assets are, a store of value. So you can definitely use, Bitcoin, USDC, anything that you would like to use, as a form of payment. And in fact, big payment providers like Stripe and others provide crypto rails now for payment as well. So it is being integrated into all of our, traditional payment mechanisms. It's just a matter of time before they become much more publicly available.
Absolutely, I'd agree. And just, again, from an application perspective, just think if there's any third parties that need to look at some part of your business's data and want to do so in a transparent way and do any type of auditing, blockchain may be a good application for it, maybe.
So we have probably about 10 minutes left. I haven't gotten a signal yet. Is that correct? Okay. I think everyone loves a good prediction. So I'm going to ask our panelists to give us their surest prediction for the next, let's call it for the next 2 years, you know, something that's within reach. What do you see happening for the world of Bitcoin or Web3 in the next 2 years?
I guess I'm going first. Do you want to go first?
No, please.
Okay, my prediction as it regards Bitcoin, and I'll try to give an answer regarding blockchains, Web3 as well, is that Bitcoin continues to exist, plain and simple. No one will shut it down. No one can shut it down. There's no head to cut off. There's no central point of failure. As we say in Bitcoin, tick-tock, next block. As for price, I don't give price predictions. I think long time horizon, and generally the direction will be higher. But it won't be in a straight line. As for Web3 and blockchain, it is my hope that some of the lessons of the past, because the blockchain as a theme, as a decentralized theme, has now been around since, let's call it 2016. We're 8 years into this. We've seen many attempts at creating projects that have token economics that are different from Bitcoin, and by and large, they fail. Whether it's quickly or slowly, they have failed. NFTs came and went, ICOs came and went. These things are not robust, durable. They are not built with a long-term view. Shared databases as a blockchain, there is very much a purpose for these things in the real world. And so those will continue to exist and be useful. How they are architected is perhaps beyond my scope. So that would be my prediction.
I mean, for me, because I believe decentralization as a concept requires network effects, it does need the next wave of users and the next wave of participants. And to me, that's why I made the point earlier about usability, because usability is what's going to drive the next wave of, there's a whole huge wave of early adopters that have gotten in, but now the next wave of people will come when you have much more usable experiences and also use cases that have real world impact and real world value, and again, a lot of money is being poured in by venture capital into this space. So definitely, a lot of these things are on their way to, being improved. I would say right now, Web3 or blockchain is primarily working on some of the boring stuff of building financial rails for the future. But once those rails are built, there's a lot more from a application and decentralized application perspective that can be built on top of it.
Actually, can I add? Sorry, I just want to add to your point. In terms of usability, from my perspective, the first time I encountered Bitcoin was 2011. Unfortunately, I didn't buy any at the time. But it was very new and rudimentary and difficult to buy and hold as a non-technical person. Fast forward 13 years later, and I literally helped someone set up a wallet on their mobile phone in 5 minutes, last week, because we can do that now. We have the applications. There's a much bigger mind share and value share that is in this space. And so in terms of the wallets and usability, you absolutely make a valid point that it is novel and different and kind of weird to manage your own keys, but it's come a long way, and I think it will continue to improve.
I just wanted to ask Neeraj a follow-up. You mentioned use cases and applications. What is the use case that perhaps people don't know about yet that you think will actually help broaden, the market and make blockchain really, I guess, a staple of our lives?
I mean, outside of the financial use cases, one space that I'm personally very interested in is decentralized physical infrastructure. So yeah, DePIN, where you have such a monopoly in certain sectors with certain providers, and I really think this is where DePIN, being able to have decentralized compute, being able to have decentralized storage, and I know it's decentralized cloud. I was very interested in Helium as a project at one point in time. It could have totally, replace the autonomy and the tyranny of our telco providers. But again, those things require the network effects to really become large enough that they are true challengers to the incumbents.
I really like that you said that, actually, because I'm going to list another example in my presentation about decentralized computing architecture and physical infrastructure in my presentation later.
Great. Perhaps final thoughts, Louis, and your predictions for the future of Web3 and how people in this room may be using it, even if they don't know it yet.
So my prediction, again, I'm going to go back to finance because that's what we do. And we do work with law enforcement. We got a booth over 502. You're welcome to come talk to us longer. But my prediction is based on what I am seeing happening now. I mentioned BlackRock, but we're working with a neobank that just launched in Europe. And the European Union has this new set of regulations called the Market in Crypto Assets Regulations, MiCA, that kind of goes into enforcement January of 2025. And so now that the EU has very clear regulations, or a lot clearer than they had, you now see financial institutions saying, okay, it's safe for us to start to build products within the EU. And so we're working with a new customer, Neobank. They are spun off of a traditional bank, right? Very large traditional bank, but their target is small businesses like you, sir, an SME. They're expecting to have 300,000 small business clients in the next 5 years, and they're using our platform to have tools so that those clients can build digital financial products, whatever they may be. So if you think about the butterfly effect of that, here you have a multi-trillion-dollar bank building a multi-billion-dollar subsidiary bank, setting up financial tools for hundreds of thousands of companies within the EU to create what could be hundreds of thousands of new financial products that go into that 16 to 68 trillion dollars and beyond. That's why I see it's coming. It is an enormous wave that's coming. You just may not see it in your daily lives, but you will within 5 years. That's my prediction.
That's great. Are there any questions in the room? Does anybody want to ask anything? Yes?
Hello. Okay. So yeah, thanks for sharing your time. My question, I heard about BlackRock owning more than 50% of Bitcoin, for example. I don't know if that's true, but what are the dangers that that poses of above 50% ownership in any blockchain?
Anyone's welcome to buy all the Bitcoin that they can. There's no problem if someone owns as much Bitcoin as they can. BlackRock owns nowhere near 50% of all Bitcoin. Maybe it's 2% at best. So they have a long way to go. I'm not particularly concerned. If they somehow manage to get another 48% of Bitcoin, the price they will bid themselves out of reach. So I don't really see that as a realistic threat.
Yeah, and I will also say, when BlackRock is buying, they're buying on behalf of the people who are investing in the ETF. So they have a fiduciary responsibility that those Bitcoins are not BlackRock's Bitcoin. It's actually the people who have invested in those ETFs. So yeah, I don't think we should be concerned about BlackRock buying. That just means more participants.
So yes, they have a fiduciary responsibility and they're buying it on behalf of clients. But at the end of the day, a Bitcoin IOU is not the same as actual Bitcoin, exactly. Right? I work for Bitcoin Mentor. I encourage people to take real ownership of their Bitcoin. I teach people how to use a wallet, own their private keys, so they have control over it. So if you want to send it 24/7, 365, your bank's not open, it doesn't matter because you're literally just connected to the internet. That's all it takes. If you have an ETF, you're connected 9:30 to 4 p.m., Monday to Friday, and not on holidays. And you can only convert to dollars. You cannot send it as Bitcoin. So when you own an ETF, you own an IOU for Bitcoin. You own price exposure to Bitcoin, but not the real thing. And there's a very stark difference.
Well, look, we need to wrap up. Thank you for your question and questions in general. Thank you for your attention. I want to thank our panel, Louis, Niraj, and Jesse. And for those who are interested, the price of Bitcoin right now is $72,000, nearly all-time high. Someone's waving at the back. But I mean, I say that because the price of Bitcoin is perhaps an indication of, you know, the trend, perhaps of the, I guess, the trueness of, or the reality, let's say, that blockchain is indeed here to stay. You know, so anyway, I just wanted to say that. Thank you very much again to our panelists.